afternoon. My name is Ananya Kumar. I'm the Deputy Director for Future of Money at the Atlantic Council's Geoeconomic Center. I'm here live at our studios on a panel titled Beyond Speech, Policy Approaches for Fast Payment Systems. I'm joined by some distinguished guests. To my right is Harish Natarajan, who's a practice manager at the World Bank for Financial Inclusion and Infrastructure, Finance, Competitiveness, and Innovation. That's quite a title, Harish. Next to him is Loretta, who's a member of the Visa Institute's Advisory Council and former president of the Federal Reserve of Cleveland. Thank you for joining us, Loretta. And Ali Moussavi is joining us from the Bank of England, where he's the head of the Payment Strategy Unit. Thank you all for joining us, and let's jump right in. Loretta, you were leading the Cleveland Fed during an important moment of transition in the U.S. on fast payments. What are some of the lessons that you've gotten from that experience that people who are building fast payments today can take?
So yeah, it was a very exciting time to be at the Fed during this last 10 years when I was the head of the Cleveland Fed. So I chaired the payments committee for the last 4 years at the Fed, and that was when we launched our instant payment service, FedNow. And there were a lot of lessons in that project, and I'd say a couple of them were, one, know what your goals are when you start. The Fed did a lot of work working with the public to find out what they wanted, working with practitioners who were actually in the space so that we actually knew what they were after, and then also what we wanted to do, which was make a public faster payments service that would be a second option for the private sector RTP, real-time payments, and that was important, right? We heard from our constituents. We put it out for public comment before we went down that path and saying, hey, we're thinking about this. We need to modernize our payment system. What do you think? And it was the small banks, actually, and the credit unions who were very much in favor of the Fed building its own infrastructure in competition. Yep. The second thing I would say is really know what your customers want. And what the end users are going to want. And that was very important. We actually convened a lot of groups together throughout the whole process so that we would always be aware of what they wanted to get from this faster payment service, and that, because there's externalities here. Yeah. The service, there's network effects. You can build it; they're not going to necessarily come.
Yeah.
And so you want to make sure that you're delivering something that the public and the banks find of value.
Right.
And the other thing I would say, the third lesson is, don't underestimate your ability as a central bank to convene, because you are a respected, objective entity, and to bring different groups within stakeholders and payments together who don't often sit together, that was very powerful when we were building FedNow, to get those ideas and to get those constituents to talk to one another.
Right. So the first goal you articulated was setting clear policy goals and vision. We hosted Ali here about 6 months ago as they were publishing their national payments vision, which is both the sort of policy and communications exercise on the part of Bank of England. Ali, could you tell us a little bit about why you set out to do that, and then what, if anything, has changed in the last 6 months since you've released it?
Yeah. So the National Payments Vision is incredibly exciting. It's really an opportunity and really a sort of mission to bring together lots of different UK authorities that have an interest in the payments and money space. So it's actually not entirely driven by the Bank of England. It's sort of bringing together various authorities across the regulators and also the Finance Ministry. So we brought together our Financial Conduct Authority, our Payment Systems Regulator, the Bank of England, the Central Bank, and also the Treasury. And really the idea here is to look at a coherent vision, given that we all have a different set of public policy objectives in this space. So from a central bank perspective, we're very worried about and concerned about monetary and financial stability, whereas when it comes to payment systems regulators' objectives, they're thinking a lot about innovation, competitiveness, and the conduct authority is thinking about making sure there's a level playing field and protecting consumers, and the Treasury is concerned about enterprise and growth and making sure the UK retains its place as a premier financial centre. So bringing together those various objectives and also engaging with the financial industry, fintechs, smaller banks, who often are underrepresented in these discussions, and also the more established players in the market, essentially making sure that there is a set of engagements and also a vision that we can communicate, and a set of outcomes that then can present a kind of industrial strategy for payments almost.
Thanks, Ali. So you're both representing your domestic markets. We have someone here who convenes sort of global markets here, both advanced economies and emerging markets. Harish, what have been some of the best policy lessons you've gotten as the World Bank has engaged with central banks on fast payments?
Well, thank you, Ananya. Of course, the World Bank works with developing countries, but we do keep an eye on the developments in advanced economies, and we have drawn inspiration from the initiatives in the UK and in the US. So we see fast payments as a game changer from a financial inclusion perspective. We see it as opening up a lot of financial inclusion gains and thereby also the development gains it unlocks. And leading to economic empowerment and jobs and all the good things which policymakers are looking for. So based on our experience in supporting about 50 plus countries now in improving their domestic payment systems as well as the fast payments implementation, I would maybe refer to 5 key experiences we have seen. A lot of it resonates with what Governor Mester and Ali were mentioning. First one is, I think central bank needs to play a championing role. And here I'm using the word championing from the perspective of convening, from motivating, from catalyzing, and not necessarily for them to operate it, but to really organize the community around it, both banks and also the businesses and society at large. And the second is not to treat it as an IT project. It is much more than in IT. There's, of course, a big part of the IT aspects there, but it's also about really understanding the needs of the users and then also to look at the broader ecosystem context in which this has to fit in, and it has to add value and provide services to the ecosystem. And a related point is, unlike looking at large value payment systems, which central banks have been operating and designing for a very long time, which was, if I may put it in a very simplistic way, it is more about improving their own efficiency gains and offering their services. But here, the role of fast payments is actually a service for the financial institutions, fintech companies, and for the end users. So it is not, you're designing it for them, not for yourself. So that requires quite a bit of private sector engagement, which is very, very critical. And I think Governor mentioned that. Related to that point is the user centricity, kind of really looking at what are the users looking for. And that really leads you into directions like how does the user interact with the payment system, what are the features they're looking for, and that's a very different mindset. And last point is it is not just a payment system, it is a platform for innovation. For the digital economy. It is not about sending money from one place to another place, one person to another place. It is also about enabling new types of economic interactions which were very difficult to do before. For example, we are seeing fast payments motivating integration of payment services into the accounting systems of small businesses, improving their overall inventory management flows, for example, right? So it's not just about payment, it's much more than that.
Right, thanks, Harish. And Ali, I saw you have a reaction to Ali talk about not thinking of it just as an ID modernization project, but really something beyond that. Do you want to add something there?
Not really. I think maybe the key point from our perspective is, in a lot of instances, a fast payment system is acting as a platform for innovation, but it's also acting as a sort of almost framework for safe innovation to take place within it in a way that is conducive to monetary and financial stability. Right. So one of the things that we've been thinking a lot about is, as there's a proliferation of different technologies and different forms of private money, such as vanilla deposits, tokenized deposits, stable coins, how do we make sure there's singleness of money across different forms of private money and that money is interoperable with central bank money? So how do we set up our fast payment systems in a way that can meet those policy objectives and facilitate innovation in that sort of safe space where there's one-for-one exchangeability and there's confidence in money?
Right, and singleness of money is something that's very easy to explain to central bankers as to why we need it. It's a very hard policy goal to explain to users who you have to keep in mind of these fast payment systems. Loretta, have you had any experience in sort of communicating this effectively?
Well, in the U.S., you always point to the wildcat banking era, right?
Yeah.
When there was competing monies and there were all sorts of games played that you wanted to send something across the country and you'd take the slowest route you could because you don't want, and so you had these monies competing and they wouldn't necessarily exchange at par.
Yep.
And of course, that became a very unstable system, and it actually was one of these crises was what drove the regulation now to have a single currency in the U.S. So I think in the U.S., at least for students who are in college and high school, you can explain it that way. Is that you don't want to have these competing monies where the user, right, doesn't feel like it's a credible currency that will always trade at par, that it's going to trade at par.
That's true.
I would follow on from something you said is, I think you're right, you want to understand the technologies that will enable a single currency. But I think the other thing is that you also need to have the rules and regulations and policies that will enable it too. So thinking about it not just as technology, which Hamish said I think is very important. It's more than just technology. And that also means that it takes more than just linking systems together.
Yeah.
If we're talking cross-global payments, it takes really coordinating and really thinking about the rules that underlie and enable that seamless transfer of money from one place to another.
Yeah, I think thinking of interoperability as purely technological is not very useful. Regulatory interoperability is more important and sometimes harder to sort of figure out between jurisdictions. Ollie,
it's just interesting. So I think sometimes the communication challenge around a concept is often the case when a concept is so intuitive that it's so difficult to get across. And the singleness of money means that the pound in my pocket equals the pound in your pocket. And ultimately, I think that is really something that is central to the institution of how the 70-odd million people in the UK who use money, it brings them together. And it ultimately is an institution that I think singleness sort of represents really well. And so sometimes the challenge of communicating it is because it is just so central to how people think about it.
That's true. Yeah. No, I think that's right. And policy is always as much a comms exercise as it is sort of an impact exercise at the end of the day. Loretta, I want to talk to you about something that's been raised by all three of you, which is public-private coordination. It takes about 5 minutes to get to that point, but it's really hard to actually see effective examples of that happening. Have you seen something in your experience that you think has worked well and is an example that others can build on?
Well, I'll bring back to my FedNow experience. One of the things we did with FedNow, we wanted it to be this neutral platform. We also wanted to bring it to market relatively quickly, given that we studied modernization of the payment system for 10 years. The actual build and launch, we wanted it to be quicker, and it was 4 years. Which in central bank time is quick. Just so readers know, maybe not in real life, but in central bank time, that's a quick thing. So what we ended up doing, of course, is throughout this process is thinking that we're going to bring a basic service to market and then have the second release have more functionality built in. Well, when we talked to the bankers and to the users, what came through very, and this again I think is a good indication with how many says you really need to be hearing what people want, right? Fraud protection was key. Everyone agreed that was something that we needed to do in the first release much more robustly than we might have anticipated without having those conversations. And of course, that's still, I think, a big part of what we're doing. So again, I know the session is about, it's more than faster, it's faster and safe, right? You're not going to be able to have a successful resilient payment system if you're not able to guarantee in some sense, right, that there's integrity behind those payments. And I think the fraud protection part of it and keeping up with what's happening with technologies can be a help, but it also can hurt because other people have that technology too. That's, I think, a key thing.
Yeah, and something I'll just say that's sort of in the zeitgeist now is how the dependence of U.S. on check clearing systems is sort of unique amongst advanced economies. I think people, when they come here, are often shocked at how much we depend on checks.
I think it's even more problematic in the sense that the people who are using checks often think they're safer
exactly,
than using electronic and digital payments, and unfortunately, that's just not true.
Yeah.
And so, but it is true that check usage in the U.S. has gone down. And it's continuing to go down. So that's a good thing.
Yeah.
And, my feeling is if FedNow, gets more as it goes out and expands and evolves, I think we're going to see that continuing.
Right. Harish, you recently wrote about two sort of technological issues as you've built out fast payment systems. One is the cybersecurity and privacy part of it. The other is the sort of open, closed source debate and thinking of it as a binary. Could you talk a little bit about what you've seen happen there and what, in your opinion, the policy solutions around these two topics have looked like?
Right. I think both Ali and Governor mentioned about safe innovation.
Yep.
And in the context of fast payments, what we are seeing is that the attack surface for cyber attacks is actually increasing because of the new players entering the market, and they are also inserting themselves into the transaction chain. So it is no longer about safeguarding one system, but also you have to safeguard the entire value chain. And in many countries, fast payments are being introduced while the overall cybersecurity framework is being developed. So that actually also kind of puts the onus on the operators of the fast payment systems and the community to ensure that cybersecurity safeguards are taken into account. So that's why we developed that particular focus note on the topic. And I think what we are seeing is that there is a need for factoring in cybersecurity from the design of the whole system itself, and it has to be integrated into the design. And also, it is not just about the systems; it is also about looking at how the user interacts with the system and how do you protect the user from potential cyber attacks. So the issue of frauds, fast systems are also are faster for criminals to exploit. So you have to really safeguard. And a related point is, fast payment systems also include a lot of data, additional data flows. So there's a data protection and privacy angle as well, which also we need to factor in. So that's the context on the cybersecurity. What we concluded is there's a lot of need to look at centralized governance arrangements around it, a lot of common data sharing, incident response, and all of that, not just within the country but also the region and more globally. On the open source, given that fast payment systems are introducing features and it's a platform for innovation and a framework for innovation, as Ali rightly pointed out, it means that a lot of the solutions available in the market are not necessarily fully meeting the requirements. So there's a lot of additional development which is required. And the question is, how do you develop that? Do you develop it all bespoke from the grounds up, or do you leverage open source components which are available? So I think that is an important choice currently, and it's very hard to find even a solution available custom off the shelf which doesn't use open source components. So I think it is pretty much integrated into the software development frameworks currently. But the question of whether you want to develop your entire fast payment system as an open source, that is a discussion which is going on. There are some providers who have published it that way, and it is good to look at the overall total cost of ownership. So it is not that you are, it is open source, so it is free, so it is, I'm lowering my cost, but then there are other issues you need to consider. And you need to look at the entire software development value chain and ensure that you have adequate governance around that. So I think open source is a good development, and I think it should be harnessed. But we have to be very clear-eyed about how we integrate it and look at both the opportunities as well as the risks.
Right, that's right. Ali, I want to turn to you about sort of the technological part of it. Central banks are not considered to be the most up-to-date with technology most of the time. And there's sort of a catch-up feeling that you're always doing with new tech coming, creating risks, central banks creating solutions. How do you sort of contextualize a vision within that framework as technology evolves and new risks come up?
So look, I think it's a really important question. From our experience and the payments strategy work that we've been doing over the last 2 years, the central tenet of that work is that in many ways we felt that the conversation on the technology had overtaken the conversation on the central banking and the economics. And I think we want to apply some economic principles and central banking thinking to how we think about these risks that are growing in an emerging sector. I think the central point to make about innovation, insofar as it concerns a central bank's reaction, is that we felt that innovation needs to be one of our principles, that we should be doing our work not as an innovation being an afterthought, but very much innovation being baked into our financial stability analysis. And so almost treating innovation as being central to financial stability and innovation being important for money to retain its anchoring role, both central bank money, and that's why we've been exploring technologies around wholesale CBDC, but also commercial bank money as a sort of primary method of monetary policy transmission. Ensuring commercial bank money can stay relevant, can serve the needs of its users, really speaks to the importance of making sure a central bank is creating the sort of rules and regulatory frameworks and the conversation environment to enable safe innovation to take place.
Right. You mentioned the word CBDC here, so I have to sort of follow up with our table. And this is a question really to all of you, and we can go down the table on this. There's a certain understanding of different kinds of payments methods, like CBDCs, like my Zelle wallet, and tokenized deposits increasingly, and crypto assets too in the spectrum, as competing with each other. I just want to get your perspective on how you see them as competing or complementary, and where do you think countries lie or your jurisdictions lie? So Ali, first you, and then we'll go down.
Well, it's a very big question. It's an interesting question. So look, some of this comes to a lot of what Harish was mentioning. Right. So we need to think about the ecosystem as a whole. And in the UK, the way I sort of often think about this when we're having conversations at the Bank of England is we think about a retail payments jigsaw. Right. That there's lots of different infrastructures, there's lots of different technologies, there's lots of different monetary forms that we need to think about, and how do we solve for all of those? It's like a system of simultaneous equations, if you will, where we have to lay them out and sort of solve them all in one. Now, the question really is, where should competition take place? Should it take place for the rails, i.e. the infrastructures and technologies that transfer the economic claim, or should competition take place on the rails, which is in the sort of monetary instruments that are the economic value? And I think that's an open question. I think our national payments vision is going to be doing this work and thinking about this over the next year. And in some ways, I think you want a diversity of provision in some cases. So, for example, Harish talked about sort of the cyber risk profile facing the ecosystem. I think it's a good thing to have account-to-account payments at the point of sale, because that then means you're not solely reliant on cards as a point of sale solution. So in the event of a growing cyber risk environment, if card networks went down, if cash was not as accessible as consumers needed it to be, you have another way of paying for things.
I think that point of centralization is an important point. Loretta, over to you.
Before I answer this CBDC question, I have to defend my FedNow technical people, because you're exactly right. In traditional view, central banks are not, they have legacy systems that roll, but FedNow was built a whole new structure in terms of native in the cloud. I think it's the only one that's native in the cloud, so it was really much bringing state-of-the-art technology. And we did look to see whether we could hire a private sector firm to do it for us, and we could not find a firm that could actually create what we needed to create, which was ubiquity, safety, fraud protection, and resiliency that we were able to build on our own. So I just want to defend the technology piece of it. I think whether a country wants to do a CBDC or not really depends on the state of what's the use case for that. And in the U.S., as much as we want to be faster, overall, I would say the payment system works pretty well here, and it isn't clear necessarily that going to a CBDC would be the way maybe to do it. A digital dollar, and stable coins are one example of that. Perhaps that should be, having a regulatory structure that would enable that to be sort of digitizing the dollar. So I think it's depending on the country, if, and their fiat currency, whether to do a CBDC or not. It's going to vary by country.
Right, and that's certainly coming from the Fed view now as well. We hosted Governor Waller about a month ago now, and he said maybe a digital dollar is the way that we create peer-to-peer fast payments in the U.S. Of course,
and, there's also the executive order
about banning retail CBDCs. Well, preemptively. The only country in the world to do it, to ban it preemptively. Harish, over to you. Maybe an emerging market perspective here that's slightly different.
Yes, no, I think, so from our perspective, of course, we are looking at digital payments as a means to an end.
Yeah.
So the end we are looking for is financial inclusion and the development outcomes. And for that, we don't see CBDC as a panacea.
Yeah.
A lot of people kind of attribute magical powers to CBDC.
Yeah.
We don't subscribe to that. And of course, whether it is a good fit for a country depends on the context, no? But largely from a developing country perspective, what we need is well-functioning digital payment systems. And we don't see any reason why fast payments cannot provide that. And also general modernization of the digital payment system. But whether it is competition, I think one has to really see how all of this plays out. I think one needs to see there's perhaps a space for all, and it might be different use cases or different contexts. But focusing from our perspective on the development needs in developing economies, we feel the first order of business is to have a well-functioning fast payment system. But of course, keeping in mind all the new developments which are happening, how do you future-proof your investment to prepare for that future? No? It is very possible that the fast payment systems might need to be the rails on which other forms of money might need to be transacted.
Right.
So I think it is important to keep that in mind. And also in terms of the different features, in terms of the access to central bank money, how does that work? I think all of that will have to be kept in mind.
Yeah, right. So the infrastructure versus monetary instrument point that Ali was raising again. Ali, do you have a reaction to that?
Just the sort of point Harish made about being ready to move at pace is really quite key, because the scale at which these technological innovations present challenges and opportunities is really quite, it's really quite prompt. And so when that challenge crystallizes, sometimes there isn't a lot of time to build new infrastructures, to set new regulatory frameworks, to pass laws. And so having that option value and doing that thinking in advance and sort of challenging ourselves, kicking the tires on our propositions is really quite important as a sort of policy community.
That's
And
right.
I would say that it's the regulatory policy piece that's actually harder than the technology piece.
Often, yeah.
Yeah. Yep. Especially cross-jurisdiction as you start to get to fast payment systems. This is my concluding question to you all, and we'll go down this way. But really, there's a sense of accomplishment when a central bank creates a fast payment system that works, and most of the time it works. The question I have is, how do you assess the impact once it's developed, right? What does an assessment or a benchmark look like, and how do you tweak it or change it to respond appropriately in time to the changes that are happening in your market? Harish, let's go down this way.
Right. I think kind of going back to my theme of development outcomes, I think one needs to really focus on the breadth and depth of usage. And a lot of people focus on X number of transactions happening,
volume.
Value happening. But I think it's more important to also it's equally important to look at how many people are using in the country, for what use cases, and then also how intensively they are using it. I think both the breadth and depth dimension is important. I think it's also important to the point which Governor was making earlier, are the smaller institutions able to participate?
Yeah.
How engaged are they, and how much value it is adding to them? And then other point is related to what is the innovation it is catalyzing. So that's the way I would look at it.
I mean, I just would add on from the FedNow experience, like we focused on getting the banks onboarded, right? So measuring how many are onboarded, but also being onboarded doesn't necessarily mean they're using it, right? And then using it doesn't necessarily mean they're using it to send payments. Because if they're only receiving, and a majority of the banks that signed up were receive only when they first sign up, then that's not. So you really need to have the network grow by having both sending and receivers. So that was a focus, and continues to be a focus on FedNow. So it's really in the nascent days of when you're growing it, go back to what your goals were to begin with, right? We wanted this ubiquitous payment system that everyone could access and use. And so we measure against that. And the resiliency of the system, fast is great, except when it's not available, right? So that's the other thing that you have to measure. And then I would say the other thing that, everyone should be doing when they're building these things is user surveys are really important, right? And so understanding from the user's point of view what the impediments are, right? So surveying the banks that would be the primary users, but also the use cases, and working with fintech providers and others has been important to FedNow, and sort of really getting the banks to understand that this is an innovation that this might be something that they should definitely consider doing.
Right, and you can find unexpected things through those user surveys, especially when it comes to how people use their different rails of payments. Ali, over to you, last word.
So I'd say four things, and I've had the benefit of going last, so I'm sort of almost summing up what's already been said. Look, the first thing to me is singleness of money. So protecting your monetary and financial stability objectives and ensuring par-for-par interoperability and exchangeability between different forms of money. I think that's central to a central bank's bread and butter objectives. Second thing is resilience. As Governor Mester said, look, this is really the sort of bedrock of how we think about the regulation of financial market infrastructures. Money is an institution and it consists of both trains and rails, and making sure those rails are always operating the way that the public that use the money and have to have confidence in the money demand is key. Third thing is innovation. It cannot be an afterthought. Innovation has to be central to your monetary and financial stability objectives. That's both innovation in the settlement asset, that's the bedrock, that's central bank money, and innovation in private money as well, to make sure it's serving the needs of consumers in an ever-changing world. And then finally, it's governance and funding. To be able to meet, the sort of innovation outcomes and singleness of money and the resilience you demand of the system, you need to have a governance and funding model on the one hand sort of restores the independence of the payment systems operator, whether that's a central bank or a third party, but also a funding and governance model that retains the members' confidence as well, because ultimately it's going to be members that are paying for upgrades, that need to have the buy-in to the system to make sure your independent payment systems operator is meeting a wide set of interests. So those are sort of my four tests.
Thank you, Ali, and I think that's a great place to end it. Thank you all for joining me today. Thank you for taking the time. And that's it for today from the IMF studio. We'll see you tomorrow morning. Thanks.